Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. I will begin covering these new names and review them in future videos. These are the names that have fulfilled up to or more than 70% of their textbook targets. I have put in timestamps, so please use them to skip to the names that interest you. I'm starting coverage on Euro Sterling because I suspect that it may be forming a head and shoulders top. This bearish pattern will be completed via a close below the neckline around 86.50, and the textbook target is 84.42. Alternatively, rising above 87.45 will invalidate this bearish pattern. Aussie Kiwi may be forming a bearish pattern, a rising wedge. Downside is preferred after price action attempted a few rebounds that were rejected by the 20-day simple moving average. Now, given how far price action is from the vertex, I suspect that this bearish pattern may not be completed so soon, but I'm willing to accept an early completion, which is via a close below the support trend line. The bearish pattern suggests a drop of 293 pips from the point of breakdown. Alternatively, breaking above the resistance trend line will invalidate this bearish pattern. I'm late to cover platinum, but I think the move is still fresh despite the sharp drop on Friday. Platinum completed a rising wedge on Friday, and the textbook target is at 1,872.66. It also closed below the 20-day simple moving average, adding to its downside bias. Now, after this sharp drop on the 30th of January, I expect the next 1 to 3 days to likely be up days, the correction phase, and the correction phase could reach the support trend line or slightly above it before it gets rejected to enter the bearish resumption phase. Rising above the resistance trend line will invalidate this bearish pattern. There have been several calls that were successful, and that means more than 70% of their textbook targets have been reached. The first one is Microsoft. I turned technically bearish on Microsoft over here on the 19th of November due to the completion of a double top that has a textbook target at 430.1. Microsoft reached 100% of this target on the 29th of January. I will cease coverage on his name, but just to comment further, as you can see, price action has overextended below the lower Bollinger. So I think Microsoft is likely going to be higher first going forward before resuming the downside if the bearish trend persists. Second reason why I think Microsoft should be higher first is because there was a huge gap down on the 29th of January. My take on gaps is that they are usually, though not always, partially or fully filled. So there is a risk that Microsoft rebounds to around 478. Another successful call was on Apple. Apple fully reached its textbook target over here at 253.83 on the 20th of January, and the rising wedge bearish pattern is therefore resolved. I will keep coverage on Apple though, because I suspect that it may be forming another bearish pattern. I suspect that it may be forming a head and shoulders top. So the head is over here, first shoulder, and after this upward move, if Apple declines in upcoming session, then this would form the second shoulder of the head and shoulders top. The neckline is at 244. Closing below this neckline will complete this bearish pattern, the new bearish pattern that has a textbook target at 199.41. Of course, the higher Apple rises from here, the less likely it is to form a bearish pattern. I noted to stay bullish on Nissin Foods in the last update on the 28th of January last year. The falling wedge has a textbook target at 3,248, and Nissin Foods reached a high over here of 3,165 last week. That's around 82% of the textbook target reached. This falling wedge is considered successful, but as always, I will keep covering Nissin Foods and see if it reaches the textbook target. I first covered dollar yen on the 17th of January and highlighted its bearish potential from a rising wedge. I noted that if dollar yen breaks below the support trend line, this bearish pattern will be complete and suggests a drop of 5.7 yen. The breakdown took place around 157.43, therefore the textbook target is at 151.73. Dollar yen fell to a low over here at 152.09, reaching 93.6% of the textbook target. The next move for dollar yen, I believe, should be higher first due to over here overextension below the lower Bollinger. I will view this rebound to be the correction phase of this bearish pattern, after which dollar yen should enter the bearish resumption phase. The Kiwi dollar is another cross that quickly completed its bullish pattern and rallied. I covered Kiwi dollar on the 17th of January and highlighted a head and shoulders bottom, which was completed very quickly on the 22nd of January. Kiwi dollar climbed to a high over here of 0.6092 on 29th of January. That's around 94% of the textbook target at 0.6106. Due to overextension above the upper Bollinger, I expect Kiwi dollar to be lower first going forward, and this could result in the correction phase, which can go slightly below the neckline at 0.5845 before entering the bullish resumption phase. I will continue covering Kiwi dollar for the time being. I turned technically bearish on Sterling Aussie in a video on the 17th of January due to completion of a descending triangle that has a textbook target at 194.67. Sterling Aussie over here fell to a low of 1.9507 on the 29th of January, reaching around 92% of this target. I consider this pattern to be successful, but will retain coverage on Sterling Aussie to oversee its price action development. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.